Markets are pretty set that the Federal Reserve will not raise rates once again at their meeting in September. But traders will want to know if US consumer prices have continued to rise throughout the summer and how this may impact the decision. Hello and welcome back to our channel. My name is Daniela Hathorn, and in today's video, we are going to be previewing the US CPI data, which is expected to be released on Wednesday this week, how this may shift expectations in the market about the Fed meeting, how it may impact the Fed and the dollar. Before we get into it, please like this video, comment, subscribe, and turn on your notifications. So as I was saying, markets are pretty set now that the Federal Reserve is not going to raise rates at their meeting next week, September 20th. Now, market pricing currently standing at around 93%, no chance of a change in interest rates. But of course, we do still have some crucial data to come out before then, with the main piece being the US CPI data for August, which is expected to be released on Wednesday. Now, US CPI peaked at 9.1% in June, and since then, until last month, it had been dropping continuously. Now, in July, we actually saw it rise for the first time in 12 months. It rose to 3.2% after hitting 3% in June, which is actually the upper bound of the Fed's inflation target. We saw in July when the June data was released, we saw a very positive market reaction, a lot of risk on sentiment. We saw stocks really lurching forward, and that was on the back of that positivity around the fact that the inflation in the US, the CPI, was finally coming down to the long-term target that the Fed has set. Now, the rise in July, which was released in August, actually saw that undone. Some of the momentum falling back. We saw US yields picking up on the back of that, and that helped the US dollar push higher. It's expected we may see a similar scenario on the back of this reading coming this week. As I said, the August CPI is expected to rise once again, expecting to see the headline rise to 3.6% as per a poll by Reuters. So that will be a significant increase in headline CPI. That would have meant that in 2 months, it's gone from 3%, which is the upper bound of that inflation target, to 3.6%, getting closer to 4% once again. So a significant rise, also weighing on risk appetite in the market, likely seeing the US dollar picking up some support. Now, core inflation, which had been very sticky in the past, did actually manage to fall in July. We saw it fall from 4.8% to 4.7%. And markets are expecting it to continue to fall further to 4.3%. So we may see some resilience in the market sentiment on the back of that. Some of those bets that the Fed may continue to hike rates will be pared back if we do see a drop in core inflation. Now, with regards to how the market will react, I think if we do see the data coming in line with expectations, so seeing another rise in CPI in August, we, as I said, likely to see the US dollar picking up, seeing the appreciation continue and strengthen further. That will likely weigh on the likes of Eurodollar, of cable, also on gold and silver. US stocks are likely to also see some negativity priced in because of the impact this will have on valuations further down the line. So expect to see a little bit of a choppy scenario in the next few days if we do see that CPI rising as expected. If we actually see a reading below expectations, let's say we see a little bit of a rise, but not as much as expected, we may see some positivity coming into the market. I think the initial reaction, we may see the reverse of what I've just mentioned. So the dollar down, US yields down. We may see some positive momentum in stocks. But I think that won't have a lasting effect. It's likely we see that reverse down the line as traders digest the information. And although the reading may have been smaller than or below expectations, the rise may have been smaller than expected. If we do still see a rise from the previous month, it still points to inflationary pressures continuing to remain very sticky, and that is not great for the Fed's mandate. If we actually see a reading below expectations, then likely that we see a lot of positive momentum come in, stocks, gold, silver, taking the majority of that momentum. Also the likes of Eurodollar and cable, some of these more high yielding risk FX pairs. So That is likely to see the scenarios. Of course, it's all going to factor in as to how this may impact the federal rate decision further on in the month. As I said, markets now pretty set that we will not see another rate hike from the Federal Reserve in September. A little bit of a split decision in November, which is the next meeting. I think it's currently 60-40 in favor of a 25 basis point hike. So with Jerome Powell and a lot of these FOMC members continuing to be very hawkish with their messaging, we're not yet in that headspace where we're seeing a Fed pivot or the terminal rate really coming in. But yes, seeing definitely reduced necessity to see continued further rises in the interest rates. So that is pretty much the scenario that we had. As I said, a lot of focus on headline and core CPI. How is that going to factor into the federal rate decision? And of course, how are markets going to react to that, especially stocks and the US dollar? Let's jump onto the chart now to see how markets have been trading. Okay, so here we have it, the US dollar index, a basket of currencies, Capital.com via TradingView. As you can see here, that positive momentum now taking place since mid-July, really managing to build those higher highs and higher lows. A little bit of a retest of bearish momentum along the way. As always, that indicates a healthy climb. From there, retesting that 200-day simple moving average, finding further support in the last 2-3 weeks to continue to move higher up towards the 105 area. That's a key psychological level. We're currently trading at around a 6-month high. And as you can see, a little bit of resistance up ahead. You can see the RSI was starting to show overbought conditions. So potentially a little bit of a retracement underway. As you can see, the RSI now starting to fall over the last 2 days. The index here, as you can see, trying to trade lower this morning after seeing a little bit of an indecision candlestick here on Friday, struggling to find any further momentum to push higher and actually ending the session there in the red with that candlestick, lengthening to the downside there, that tail end, seeing a lower low and lower high. So that may be a short-term turn in momentum here. We may see from here a little bit of a pullback back towards the 104 level, where we may see some support come in. Now, the dollar index has been trading recently between two key Fibonacci levels, the 38.2 and 61.8% Fibonacci retracements. Those have been mostly keeping the pair or the index restricted since December last year. A few attempted breakouts to the upside, but struggling to find the momentum to push even higher, even as the 200-day moving averages come now closer. Given the index is now above the 200-day simple moving average for the first time since November, we may be building a scenario where we get to see even further momentum to actually break above this 38.2 Fibonacci and actually trade above 105 consistently as we build those gains. As I said, the fact that speculation about another rate rise from the Federal Reserve, if not in September, then in November, has been helping the US dollar gain ground over the last few weeks. But also those tensions we're seeing in China with Apple, and also a lot of concerns around the world about stagflation and recession, of course, alluding to some safe haven asset appeal, helping the US dollar pick up even further. So for now, the path of least resistance continues to be to the upside in the longer term, potentially seeing a little bit of a short-term reversal. That's not really unexpected. As I said, it's healthy to see within a rally some retracement along the way, retesting whether the current levels are sustainable, whether there's enough appetite to continue to trade in that direction. So likely to see a little bit of indecision over the next few days. I think on Wednesday, once we get that CPI, we get a decisive move either side of this. And that's where we see that momentum continue. But it looks like the indicators are pointing towards a further bullish rally. That is it for today's preview of the US CPI data. Thank you so much for watching, and don't forget to subscribe to our channel.